Hi, my name is Daniel. Today I'm going to show you how to identify big players. Take note that this is my website, daniel.com. So if you want more information regarding stock tips, do log on into our website. The thing is, let me show you a few examples in the past history, how I actually spotted big players, and I update some information in my website. This is actually published in 18th of December 2012. At the time I issue a stock tip, I said the headline, a speculative play on Blue Mont. So I did say it's a penny stock, and at the time it was 20 cents. And I did say accumulation have started yesterday. At the time it was 21.5 cents. Let us see what happened. It was 18 December when I said it was here. Then after a few days, the stock actually ran. Then it consolidated and it ran again. Definitely this push is by the big players. But let us see another stock. This stock I updated 18th of January in 2013. This was Biosensor. The headline I said is in tight accumulation and distribution zone. But again, I spotted the big players that are playing this stock. And let us see what happened. When I update, it was 18th of January. And after which I update, the stock actually pushed up. Then what happened is it dropped sharply. This stock actually shows big players that are not playing long term. In fact, they are short term big players. What we as a retailer we want is to spot big players that want to play long term. We do not want a stock whereby it falls after going up for a few days. In 21st of December 2012, again I spotted these big players buying the stock, United Envirotech. It's a Singapore stock. Again, I did say that there's sign of accumulation for this penny stock. At the time, it was 50 cents. Let's see what happened. 21st of December, it was here. Then suddenly the stock keep on pushing and pushing and pushing and went up. And after which it consolidated and it went up and consolidated again. In the end, this stock went up to a high point of $1.70. What I do mean is that as a retailer, you need to find such a stock whereby the syndicate or the big players keep on playing the stock again and again and again. Okay, before I touch on how to spot big players, let me touch on the specifics. This is especially important for those who have not have any experience in candlestick chart. Let me show you what is a candlestick chart. Basically, in Singapore and Malaysia region, if you use a normal candlestick chart, you will be able to spot these two types of candles. One is what we call a hollow candle. One is what we call a solid candle. Okay, a hollow candle represents an up candle. If it's a daily candle, it represents an up day, whereby the closing price is higher than the opening price. This is what we call a body of a candle. This is the upper shadow. This is the lower shadow. Okay, and at the top of this candle, if this is a daily candle, at the top, this is what we call the daily high point. And at the bottom, this is what we call a low point. So in a candle, you shall be able to see four prices. One is high price, one is close price, one is open price, and one is low price. If the close price is higher than the open price, that means today is an up day. What if the candle is a solid candle? In a solid candle, this represents a down day. The open price is higher than the close price. There's an intraday high. There's also an intraday low. So a down candle is represented by solid color. Okay. Before I start off telling you how to spot a big player buying a stock, you need to understand this thing called accumulation and distribution. And you might have this question: how do you know a big player is accumulating or distributing a share? And some of you have this answer just by looking at volume. I do agree that volume is one crucial factor that all of you need to look at to spot whether a big player buy or sell a stock, accumulate or distribute a share. In fact, let me tell you a bit about me. When I get started with stock trading, in fact, I have a mentor. My mentor is Mr. Hu Liang. He's a very well-known stock investor. In fact, during his young days, he actually went to Wall Street. He became Merrill Lynch vice president, and nowadays he actually got back to China, okay, or Taiwan. In fact, during his 40s, he actually went back to Taiwan to revamp the Taiwan securities. And it was in 2010, we are actually the first organizer that invite Mr. Hu Liang to be in Singapore. And in fact, what happened is Mr. Hu Liang did give me some tips about how to buy shares. And I still remember, this is a very interesting anecdote. In fact, he tell me, Daniel, if you buy shares, you will be just like riding a boat. You need to buy shares, okay, that can run. And you are like the so-called the fisherman, okay, who row the boat. You need to row the boat when there's wave. If there's no wave, the boat will not move forward. So buying shares is the same thing. You need volume. You need volume that's high volume. If not, the stock will never move. And that's what I did. Every time a stock has high volume, I will go and buy. But you know what? The boat in the end capsized. Up till today, I don't dare to ask my sifu, why is it that I'm wrong? And in fact, only a few years later, I discovered this. It's about understanding this thing called relative volume. And please remember that volume is always relative. And that I mean you need to compare the volume to know whether there's accumulation or distribution. Let me show you. This is what I call a stock that is in accumulation phase. In the accumulation phase, the up days volume generally or relatively will be higher than the down days. Let us see this stock. Sorry, let me go back to this. Okay, this stock. This is a Singapore stock called Best World. In fact, you can see all these are hollow candles. There are in fact 1, 2, 3, 4, 5 hollow candles followed by one doji. Okay. In Japanese candlestick, doji means the open price equal to the close price. Doji to me, please take note, is a down day, and that means the volume should be low. If on the doji the volume is high, it's never a good thing. That means the big players may not be accumulating. Let us see. There are 5 straight days there was up day, followed by one doji. As you can see, the volume on this doji day is lower than the up day, followed by one up day. Is the volume higher or lower? The volume is higher. Followed by 3 down days, because this doji is a down day. These 2 are down days to me. So followed by these 3 down days, okay? The volume is relatively lower than the up day. Followed by one up day. This up day, the volume is higher than these 2 down days. Followed by 3 down days, consecutive down days. The volume is lower than this up day. Followed by one doji. On the doji, it's actually considered down day. The volume is lower than the up day. Followed by 2 up days. The volume is higher. Followed by one down day. The volume is lower again. Another up day, volume higher. Another down day, volume lower. Another 3 up days, followed by one down day. As you can see on this down candle, volume is again lower than the 3 up days. So consecutively, after looking at this chart, for somewhere around 3 weeks or 4 weeks, you can see that this stock is clearly in the accumulation phase. And that's the reason why the stock goes up, because the big players are buying along the way. Then what happened to stocks that's in the distribution? Most likely the stock will go down. There will be sell down. For example, this is a Singapore stock called Noble. You can see that this stock it started off with 2 down days, whereby the volume is higher than the up day. And there's an up day followed by 2 down days. These 2 down days, the volume is higher than this up day. Can you see? Followed by 1 up day and 2 down days. These 2 down days, again, the volume is higher than this up day. Okay? Followed by 1 up day, 1 down day, 1 up day, 1 down, 2 down days. Again, the volume is higher than the up day. These 2 down days, the volume is higher than the up day. Followed by this up day, whereby volume is lower than the down day. Followed by 1 down day, and you can see that the volume is generally higher. Followed by 1 up day and so many down days. Okay? Generally speaking, you can see that the down days are relatively higher than the up day. This is what we term as distribution. Okay. All you need to do is to know the 4 steps, okay, to identify whether big players are buying a particular stock. These are the 4 steps. First step is to know whether there's a price surge. Second step, the volume must show big players are in this game and you want to be with them. Third step, what you need to do is wait for price consolidation, and the consolidation must be stable. And fourth, it needs to show they are accumulating again before you enter this game. Let me go through the step-by-step process. Step 1, what is a price surge? Today I'm going to introduce this stock to you. This is an ultra penny stock that's listed in Singapore. It's called We Holdings. I want you to take note that the steps, the method I'm teaching you is suitable for ultra penny stocks, mid-cap stocks, but not large cap stocks. Please note that in Singapore and Malaysia, a large cap stock like DG or even Capricorn are not easily manipulated. That's the reason why you can only apply on ultra penny, or even mid-cap stocks. So this is an ultra penny stocks that is around half a cent. I want to show you that using this example, it will still work in the ultra penny stock. So as an example, this stock was lying dead. It was consolidating at around half a cent. And suddenly, there's a surge in price. So the first step as a so-called stock investor is you must identify a price surge. A price surge is a warning to you. Okay, it's a warning to you that you must take a look at this stock. Okay, and the thing is, after you see a price surge, the question comes: should you go in and buy? My advice is better don't do so. Why is it so? Because you do not know the psychology of this big player. You don't know whether they are in for the long term or they are in for the short term. What my advice is, you must identify a big player that want to play this game for long term, for a long while, not only a short term game. Okay, so you need to wait. Okay, and based on my experience, please write this down. Normally when the price surge, normally on average, it won't last more than 6 trading days. And that's the reason why if you go in on the 6th day or the 5th day, you are in the danger of capturing the stock at a high price. So that's the reason for the wait. You need to be patient. Okay, go to step 2. Step 2, during this price surge, what you need to do is to identify and confirm they are in this game. And that's when volume comes in. You need to do what I just now teach you, is to know through the volume whether there's accumulation ongoing. And how do you know? Let us see this stock again. As you can see, there are yellow lines that just now I actually did draw down to indicate to you that this price, this candlestick here, belong to this volume. Okay, that's the daily volume of this price. Okay, I just want to show you that That's the volume. Okay, so let us see. All you need to do is during the price surge, you compare the volume of the up days against the down day to know whether they are in this game. So for example, there are 3 up days. There's a surge in price whereby the price went from half a cent to almost 1.5 cents compared to the previous down days. Example, this solid candle is a down day, this solid candle is a down day, this solid candle is a down day. Okay, compared to the previous down days, do you see that the volume is higher? Definitely, right? Before I go on, let me describe to you the chart that I'm using is actually from next view. So in next view chart, there are actually 4 types of candles instead of 2 types, which just now I briefed you about. So you can see there's a hollow red candle, there's a solid green candle, there's a hollow green candle, there's a solid red candle. There are 4 types of candles, okay, in this next view chart. But using a normal chart, you will only see 2 types, which is hollow and solid. And you do not need to be so so-called in-depth. All you need to do is to use a normal simplified hollow and solid candle chart. Okay, so no matter what's the color, but hollow candle, it does mean it's a day. A solid candle means it's a down day. Okay, so you can see that there are 2 down days here, especially this down day. You see that the volume is very low, lower than the 3 up days. Okay, then follow which by 2 up days. Volume is ultra high. After looking at these 6 days of up and down candles, you can see that indeed the big players are in this game. Am I right? But should you go in? No, you shouldn't go in. You should go to step 3. Step 3 is to wait for price to consolidate. And this consolidation hopefully is stable without coming back to cost price. Let me show you what's a consolidation. Okay, you can see that the following few days, this stock actually went down. It went down to consolidate somewhere around this support here. What you want to identify is there should be a support, a horizontal support, whereby the price could not fall down. Okay, and you can see that there's a support at 2.3 cents, right? There's a 2.3 cents support here. Okay, the price cannot seem to drop past 2.3 cents. What actually happened is these big players may be accumulating at that price. Okay, maybe accumulating at that price. Okay, what if a stock keep on consolidating and keep on dropping until it reach the cost price? This is the cost price, the original price whereby it jump up. If a stock keep on dropping until this point, that means they are gone. Why is it so? It's because normally big players buy with margin, and if they push down to a price so low, that means they are gone. Okay, so most likely what will happen is it will consolidate, but there will be a support that is higher than the price whereby they run from. Okay, and this stock, you can see there's a strong support at 2.3 cents. Okay, then what you need to do is go to step 4. Step 4, you need to look at volume again. Look at volume to show accumulation. So what you need to do, compare the up days and the down day volume. Let us see. You can see that there are 2 down days here, followed by 2 up days, followed by 1, 2, 3, 4, 5, 6. 6 solid candle. That means these are 6 down days, followed by 1 up day, 4 down days, 1 up day, 1 down day, 1 up day, 2 down days. Okay, let us take a look at these 2 down days, especially this down day. The volume, can you see, is very low. In fact, this volume is the lowest among these 2 weeks. And that shows that the big players are not selling away this stock. Followed by 2 up days. Especially these 2 up days. Do you see the volume is very high? They are accumulating. Followed by 1, 2, 3, 4, 5, 6, 6 down days. Okay, 1, 2, 3, 4, 5, 6, 6 down days. Okay, especially this down day volume is considered considerably low, followed by one up day. Okay, then 4 down days, one up day, one down day, one up day, one down day. Okay, can you see this update? I want you to take a closer look at this update. Do you think that this is a high volume or low volume on this update? Your question may be, this candle is low volume. To me, this candle is a high volume. Please remember that volume is relative. And that means if this update volume is higher than these 2 down days, it's considered a high volume to me. Okay. Followed by this down day. Take a closer look at this down day. Okay, this is the down day. Volume is low. Lower than the up day is considered low. Followed by this up day. Volume to me is very high, right? Followed by one down candle. Take a closer look. Volume is relatively lower. So you can see there are ongoing accumulation, right? Let me take a look at this 2 down days, right? Followed by these 4. This is what we call a doji. A doji means the open price equal the closing price. So actually doji to me are all down days. These are all 6 down days. Can you see especially this doji? Hopefully on the doji, consider a down day, the volume should be low. And in fact, it's the lowest. It's the lowest among these 2 months. And that is a good sign. That means on the down day, they are not selling away. Followed by one strong up day, right? Whereby volume is high. Followed by one down day, whereby volume is low. So after watching for almost 2 weeks, I would say you need to watch for consolidation for at least 2 weeks. If within these 2 weeks you see continuous accumulation, you can go in. Okay. My opinion is try to go in on a down day whereby volume is low. You can pick up price that's cheaper than up days. Okay. So after watching for these few weeks, if you see that there's still continuous accumulation, just buy in. And the next step is what you need to do is to wait. A lot of times when we buy into a stock, we are not we are impatient. But my opinion is you definitely need to wait. The longer they accumulated the stock, the better it is. Just wait for the burst, okay, to come. And this is what happened to the stock. Just now we stopped here at 2.3 cents, and suddenly there's a burst in price. You can see that suddenly the stock surged up. 2 up days, whereby volume is relatively higher than the down day, right? Followed by one down day. If you bought into the stock and suddenly during the surge in price, you see there's a down day, don't worry. As long as the down day, the volume is low, you do not need to sell away. Okay? But during the surge in price, if you sense that the down day is higher volume than the up days, then you might want to profit take. Okay? So this down day definitely volume low, so stay on, hang on to your stock. Followed by 2 up days, volume is high. Followed by one down day, volume is considerably low. Followed by one up day, one down day. Okay, so you can see that they are still not selling away. Okay, so there's another surge in price. Okay, let me now show you some example. Okay, to show you some stocks that now probably these few months actually show accumulation. Okay, this is a Malaysia stock. The stock name is called Penta. Okay, Penta. I want to show you that Penta did show accumulation, and you can see that this stock actually consolidated for some time, somewhere around 77 cents in July. Then what happened is there was a surge in price. Okay, remember step 1, you need to see a surge in price. During this surge in price, all you need to do is compare the up days and the down days. Okay, so you can see there are 2 days, there are up days. Definitely the volume is very high. Followed by one down day, the volume is relatively higher than the lower than the up day. Followed by 1, 2, 3, 4. 4 up days, volume is high. Followed by one down day, volume is low. So you can see during this almost like 6 to 7 days of ascending uptrend, they are buying. You can sense that the big players are in this game. Go to step, okay? Go to step 3, okay? Step 2 is to look at the volume. Step 3 is to see the consolidation. I must see a consolidation whereby the price is almost at a certain support. And you can see that these few days, the price is almost in the range of somewhere around 85 cents to near to 90 cents. Okay, there was a certain support there whereby it rests for at least 2 weeks. Okay, and within these 2 weeks, all you need to do is again compare the up days and the down days. Okay, you can see that these are 2 up days, volume is higher, right? Relatively higher, followed by 3 down days, volume is lower. Followed by this up day, volume is relatively higher, followed by 1 down day, volume is very low. So what happens if you sense that there are ongoing accumulation? Buy in. Okay, you can just buy in. Okay, and this is what happened. Suddenly there's a surge in price again. Okay, all you wait for is the stock starts to build up the momentum again. Okay, and you can see that during this surge in price, they are continuously accumulating. Okay, you can see that this down day is lower than the up day, followed by this up day, volume is higher than the down day, followed by these 2 down days, volume is lower, followed by this 1 day up day, volume is higher, followed by this doji, volume is lower, right? Okay, so you don't have to worry. Okay, okay, so the thing is this is Penta. Let us take a look at one Singapore stock called China Aviation. Okay, China Aviation. This is a stock, China Aviation. You can see that there was a surge in price from 60 cents to 78 cents or 79 cents. Okay, there was a surge in price. During this surge in price, all you need to do is compare the up days against the down days. So for example, these 2 up days, volume is higher than the down day, followed by 1 down day, volume is very low, followed by 2 up days, volume is relatively higher, 1 down day, volume is low, 1 up day, volume is high, 1 down day, volume is low, 1 up day, volume is high, 1 down day, volume is low. These 2 up days, volume is higher than this down day. During this surge in price, definitely they are in this game. This is the price consolidation. In this price consolidation, all you got to do is to check again whether they are buying, whether they are accumulating. Okay, so especially for example, okay, especially this up day, you can see the volume is definitely higher than all these doji and down days relatively, right? Okay, then followed by 1 down day, volume is lower, then this up day, suddenly the volume is higher. Okay, so you can see during this consolidation for roughly around 2 weeks, if you sense that there are ongoing accumulation, just buy in. Okay, and this is what happened. It actually in the end surge up. Okay, you can see these 2 up days, volume is higher, this 2 down days, volume is lower, this up day, volume is higher, this 2 down days, volume lower, this up day, volume higher, this down day, although G volume is lower, this up day volume is higher, this down day volume is lower, this up day volume is higher. Okay, and there are ongoing accumulation. Okay, now some of you have this question, Daniel. Yeah, you teach me how to see that they're accumulating and join in this game, but you haven't taught me how to know whether they are selling away the stock. Okay, all you have to do is to know whether they are distributing the shares. Okay, let me quote you one example. Okay, one example. This example is called Blue Mont. Okay. Oh, so I sorry, I forgot. Okay, you can see that this China Aviation Oil. Okay, just now I show you this region whereby they're accumulating, and you can see that you can play this game again and again and again. Okay, whereby they consolidate. Okay, after it surge in price, consolidate, surge in price, consolidate. Okay, these are all accumulating. Okay, ongoing trend whereby you can join in again and again and again. Okay, let me today show you a stock whereby 2 years back uh, it actually crashed. Okay, this stock actually crashed. Okay, this stock is called Blue Mon. What happened is this stock actually surged in price. Okay, let me show you that before a crash, how do you get out? knowing that big players has already got out of this game. Okay, again, all you have to do is turn the game around. All you have to do is look at the down candles. If the down candle is higher than the volume is higher than the up candles, you better get rid of this stock. You need to run, okay, with the big players. So you can see that this stock, okay, there are 3 down days here, followed by 1, 2, 3, 4, 4 up days surging up. Okay, once the stock surge up in price, okay, if you are in this game, do not worry. Okay, if the up day candle is higher than the down day, they are still in this game. Followed by 2 down days, right? These 2 down days volume is relatively lower than the 2 up days, right? Okay, so do not worry. Followed by 2 up days, especially this up day volume is higher. Followed by these 2 down days, volume is relatively lower. So you still have, do not need to worry, do not need to get out. But can you see this down candle here? Volume is higher than the 2 updates, or in fact all the updates shown here. Okay, so during this down candle is clearly an indication that big players has already sold off their stock. So what you need to do is sell immediately with them. Okay, sell immediately. If you don't sell on this day, you better sell on this day because the volume is higher. Okay, and that is when, if you don't sell on this day, the stock market plunge. Okay, and in the end, we found out that what happened is there are some broker that slap margin on this stock, and that's why the big players even got some margin call. Okay, so today what have I done is that I've shown you the method whereby you can actually join this game, and you know that big players have already bought into a particular stock and you join in. Okay, and what you need to do is get out when they get out. Okay, I hope that, okay, through this short seminar, short clips, okay, you are able to spot the big players. Okay, a lot of our students have in fact earned thousands, okay, out of just using this simple tactic. Okay, and I hope that in future you can also make your thousands, okay, just by following the big players game. Thank you very much.